So I am an AT&T shareholder, and I've made several videos in the past explaining my bullish thesis on AT&T. I have a vested interest in them and their stock doing well. However, this channel is not all about just uplifting stocks and only talking about the good things and never talking about the bad things. In this video, I kind of want to go over my problems with AT&T stock. And if you are a shareholder of AT&T and you have been for a while, I mean, this is probably not news to you. So in this week's portfolio update, I'm going to go over just a few of the problems that I have with AT&T stock. Now, one of the first problems, and you probably already knew I was going to talk about this if you've been looking at AT&T for any period of time, is their debt. AT&T's debt is kind of out of control. Just to give you, so their total debt is the gross amount of their debt, and their net debt is the total debt minus any cash that they have on hand. For the purposes of this video, we're going to focus on total debt. AT&T's debt is out of fucking control. Now, AT&T has been doing pretty well financially, with the exception of the past year. And as long as AT&T continues to do financially well, this debt isn't that big of a deal. However, I mean, if you take a look at their latest 10Q, as far as the fourth quarter performance and the 2020 performance, like you will see, they ended this quarter and the year at a net loss. Now, this is explained by a lot of asset impairments. I mean, 2020 caused a lot of problems for a lot of people, and AT&T was not spared. They had a lot of asset impairments over the past couple of quarters, and that really hurt the bottom line. So, although the revenue didn't take that big of a hit, I mean, they ended the quarter and they ended the year at a loss. Now, thanks to their cash flow, which is net income, then you throw in all the other, operating activities for the business, I mean, they are still positive cash flow. So, although they did take a hit from 2019 to 2020, they're still positive cash flow, which is how they are still able to pay out dividends. And we'll get to the dividends in a second. But the point I'm trying to make is that if they keep having financial problems, that debt may become more and more important. Previous years, I mean, you can sort of explain that away, because up until last year, I mean, they had more equity than debt, which was a good thing. But this is the first year that they sort of dropped below that. Now, they have been sort of starting to take care of it. I mean, you can see it goes from 184 billion to 179 billion. And they did talk about in their latest quarterly earnings how they're going to start using half of their free cash flow to start paying down the debt. And they did talk about how they are a lot more focused on paying down the debt. But then you see shit like this. This is very recent. And they just acquired, or at least made a deal for a $14.7 billion loan. Now, the nature of this is to bid on a very important spectrum. Now, this spectrum is a big deal, because this is for the U.S. is auctioning a bunch of C-band spectrums related to 5G. And this is important because AT&T, Verizon, and some other big names are bidding on this. And whoever wins this will gain those frequencies. And to make a long story short about explaining what those frequencies are, the more frequencies that you're allowed to use, the better coverage you're going to have, the more data you're allowed to pull through. I mean, if AT&T wins this, over the long term, this could be big, because it could have a competitive advantage as far as their 5G network. And AT&T is trying to grow with Warner Media, with their 5G. So this is very important. Don't get me wrong. But it just seems like AT&T just can't stop getting away from jumping right in the debt, and that's kind of a problem. Now, I know AT&T is trying to grow, and if it does grow like it's trying to do, I mean, us shareholders are going to do well over the long term. I respect that. I mean, I think AT&T's guidance for 2021, I think, is high single-digit growth as far as percentage, so they're trying to grow. It's just, I don't know. As long as the economy does well in general over 2021, AT&T should be fine, but if we have another COVID situation where we lock down, now I don't think we will, but if we have another disaster like that, like AT&T is, I mean, that debt's going to start catching up, and it may have to start pausing or cutting dividends or stuff like that. And we're gonna get to that in a second, but I don't know, the debt's just just kind of annoying, and AT&T's handling of that is equally as annoying. Now let's talk about another thing that sort of worries me about the stock, and this is a combination of a few different things combined with one recent event. So right now they have a 7.18% dividend yield, which right now it seems very attractive, right, at first glance, because every quarter that I get paid dividends, I can buy whole other shares of this stock. It's pretty fantastic. However, to more risk-averse dividend investors, anything above 5% is a little risky, and 7.18%, it's even riskier. It's kind of scary, right? Now, currently, if I remember correctly, they paid 55% of their free cash flow in dividends. Now, keep in mind, as far as their dividends go, they pay the dividends out of the free cash flow. So right now, over the years, this has remained sort of solid. And that's fine, and as long as free cash flow continues, that should continue to remain solid. Now, there is one thing that recently happened that I want to talk about. This is the past dividends over the past 5 years for AT&T. They've been raising their dividend every single year, around January. Well, January this past, they did not raise their dividend this time. Now, as long as they are a dividend aristocrat, which means they've been raising their dividends for quite some time, right? As long as they raise their dividends sometime in 2021, which is probably what's going to happen, they can retain their status as the dividend aristocrat. Now, if they don't raise their dividends, that could raise a sign that, their dividend position may not be as strong as they would have us believe. Now, it's probably a good thing for the business overall if they don't raise their dividend, because that means they can contribute more of their free cash flow to paying down their damn debt. So, over the long term, that could end up being a huge boom. But for a psychological, effect, if they don't do that, like a lot of investors who are in it for dividends are going to cut away, and this stock price is going to drop. Now, AT&T, during their last earnings call, they did not hint in any way whatsoever that they're going to cut dividends. So I don't think they're going to cut dividends, but we have to consider that a possibility, and we also have to consider a possibility that they're not going to raise their dividends. Which to me is fine, but to a lot of investors, like I said, a lot of dividend investors who want dividend aristocrats, that's going to be a psychological blow if they don't do that. So those are just a few of my issues with AT&T. Now, like I said at the beginning, I am a shareholder, so overall, I do have a bullish thesis on AT&T, and I do, in my opinion, believe that it's going to do well over the long term. However, in my previous videos, I've seen people come at me with bearish opinions. And, if you look at all the data and your opinion is that AT&T is not going to make it, I can't defend that. Respect. I can understand that point of view. AT&T, over the past couple of years, has been really involved in making a lot of it, acquiring debt to acquire companies and stuff that don't make it any money, like DirecTV, which is trying to sell for a fraction of the cost. Hopefully it does. Now, a lot of people may think that Warner Media is one of those acquisitions, but I don't think so. Warner Media, if we look at the past several quarters, Warner Media has been generating serious and increasing revenue until the COVID situation hit. And now that the COVID situation has started to subside somewhat, it is bouncing right back. So I think Warner Media is a sound investment, but only time will tell for that. And not only that, I want to show you something in my portfolio. So this is my portfolio, and first of all, just to show you, I own AT&T, and it makes up currently a substantial portion of my portfolio. So I put my money where my mouth is, but that's not the only thing I want to show you. Take a look at Tapestry, right? I'm up 186%. I didn't buy Tapestry when it was all rainbows and roses. I didn't buy it at $38. I bought that shit at $13.49. Revolve, up 173%. I didn't buy this at $37. I bought this at $13.68. Facebook, bought it at $181. Cloudera, I bought it at $10.28, or average. I bought it even earlier than that at like $5. The point I'm trying to make is that I don't think my strategy is, I don't look for these companies that are all smiling roses. I look for great companies that have gotten the shit beat out of it over the short term, but have great turnaround potential. I don't spend my time with all these smiling rosy growth stocks with, to the moon and stuff. Well, except for Tesla. I don't spend my money on fucking meme stocks. I don't buy fucking penny stocks. I buy quality companies that have good histories, that have gotten the shit beat out of them with turnaround potential. And that right there is how I'm up 41.32% now. And that, not meme stocks, is how you really beat Wall Street over the long term. But anyways, what do you guys think of AT&T? I want to hear your bullish or bearish thesis. No judgment in the comments. I can see, as an AT&T shareholder, I can see both ways. So no hate, full respect, no matter what your stance is. But anyways, take care, have a great day, and eat your vegetables.